A very good evening to you and welcome to the Business Day. I'm Dwayne Burbick. An analysis has shown that despite trillions spent on the national debt, the figure is growing and will continue to grow. But co-chairman of the Economic Program Oversight Committee, EPOC, Keith Duncan, says Jamaicans should not be overly worried. Our business editor, Dashan Hendricks, tells us why Mr. Duncan has expressed that view. But first, the analysis.
Jamaica's debt situation is dire. On April 1, the debt stood at over $2 trillion, a figure which was higher than Jamaica's economy at that time, which was $1.7 trillion. And that's the crisis we are in as a nation, and that's the main reason behind most of the tax packages of the last few years. Money is needed to pay down the debt. And we've been paying down that debt. But the debt is still growing if you look at it in dollar terms. For example, 15 years ago in 2002, Jamaica's national debt stood at just over $600 billion. Now, between interest and principal, we paid $3.5 trillion on the debt in the last 15 years. But the debt still rose. We now owe more than $2 trillion, a figure which is not expected to change over the next 10 years. Even though we will continue paying down the debt. In fact, based on projections in Jamaica's deal with the IMF, the country is expected to pay another $1.5 trillion in interest and principal over the next 5 years. During that time, our debt in dollar terms will continue increasing, moving to just under $2.1 trillion. So cumulatively, we'll pay just over $5 trillion between 2002 and 2022 on the debt. And during that same period, Jamaica's debt level would have tripled from the $600 billion it was in 2002 to the current level it is right now and projected to be $2.1 trillion in 2022. So what is happening? Why are we paying so much on the debt, but it is not coming down? We sat down with the co-chairman of the EPOC, Keith Duncan, for answers. Mr. Duncan says that though the dollar figure for the debt is rising, people should not focus too much on that.
Our debt levels currently are around $2 trillion, right? And the debt levels will continue to be in this range, the nominal levels. But debt is in a relationship to the size of your economy.
That's what economists call debt to GDP. At the start of this fiscal year, the debt was 15% more than the country's earnings. By March next year, it should be just 9% higher. And that's coming down from the debt being 50% higher than Jamaica's earnings 5 years ago.
Actually, in the year 2019-2020 or 2018-2019, for the first time in many years, our debt will be actually lower than our GDP when it falls below 100%.
The fall in debt is due to two things: a growing economy and the government containing its spending. And that means the sacrifices of the past few years, particularly in the form of high taxes, should start paying off.
Resources, cash, will be freed up to be put into the areas where the Jamaica really needs, into fighting crime, into protecting our vulnerable, into education, into health. That's what we should see more of, but that can't happen overnight.
By 2025, the projection is that if Jamaica stays on the current path, the debt will be equivalent to just 60% of GDP, though the dollar figure is not expected to fall below $2 trillion. For the Business Day, I am Dashan Hendricks.
Currency trading ended today with the US dollar selling for $129.92. The Canadian dollar costs $107.09. The pound sterling costs $169.58, while the euro is selling for $159.25. And the JC Market Index gained more than 578 points in trading today, while the Junior Market Index gained 9. The winners of the day included AMG Packaging and Paper, Carreras, Jamaican Teas, Kingston Wharves, the NCB Financial Group and Supreme Ventures. On the losing end were 1834 Investments, Cable and Wireless, Express Catering, Jamaica Stock Exchange, Lasca Distributors, Proven Investments and Seprod. And that's the Business Day. I'm Dwayne Burbick. Good evening.